Trading Market Technicals Morning Call video for Wednesday, May the 8th. Well, stocks continue their record high march. The Dow Industrials and the S&P once again closed in uncharted territory. Dow up 87, S&P up 8. NASDAQ up 2. Gold, which we'll talk about, down $13, actually almost $14. And we had our top sector performance, utilities. Not really that great if you want to see money flowing into risk, and that's not what we saw. We did break on Monday, we broke the 20-day moving average, and then investors just kind of came in and bought that dip and pushing this sector back towards the moving average of the 20-day on the close. Investors are now probably at least hedged to the downside, and that's kind of scary. And if you look at Tuesday's gains, we're about 60 points, probably almost about 4% above the 50-day moving average. Now, when that happens, and why am I saying that? That usually leads to market pullbacks, right? Revision to the mean. We're so overextended just at the 8-day moving average that eventually, and again, I'm not looking to say that I'm calling for a sell-off today, but you have to be alert that the markets are due for a pullback any day. Any day. Could be today, could be tomorrow. We had a chart from Zero Hedge yesterday, and if nobody knows what that is, it's a news commentary, breaking news, and it's a great site if you want to look for what's going on during the course of the day. I like to follow them via Twitter, and they put out a chart on the markets minus Tuesdays. Taking away Tuesday's price action, the chart was down at like 15 or 14 something. In the S&P. So quite interesting to say the least to show that on Tuesdays we had some decent gains. I think the last 14 Tuesdays in a row. Don't quote me on it, but if you want to look, you can just go to their website and then just scroll back and you can find it. So we had also another interesting development last night. We had the Royal Bank of New Zealand intervening. Cutting rates. So what does that tell you? Well, there's a pattern, right? We have a huge currency wars. We already know what the United States are doing. We have the Bank of Japan intervening with their currency, devaluing the yen. Now we have Australia the night before cutting their rates to record low, and really accompanying a dovish policy statement. That's not really good and healthy for their dollar. So they want their dollar to depreciate. And I mentioned many weeks and months on end that the commodity block currencies are going to be the ones that are going to be first to go after this euphoria of buying stocks and risk on, which I think is absolutely nonsense. But nonetheless, it's not what I think. It's what price is telling us. So now that we have the Australia cutting their rates, we have the Kiwi, which the Royal Bank of New Zealand cut their rates last night, and they said that they're going to be accommodating for the near future. And that's really a welcoming statement, actually, because that is also stating that, well, the currency is not really where it should be at where our economy is. So, and it's hurting them. So that now they're intervening as well. So what's going to happen is I think that eventually you're going to have a risk off on these commodity block currencies. Also, and I keep stating, you're going to have China, which will be the canary in the coal mine. They're going to end up coming out and not going to be able to manipulate these numbers much longer. And they're also going to come out with some bad news, which they have been, right? But the markets have just literally just swept it under the rug and digest. And that's what you have when you have a bull market, right? And that's what we're in, a bull market, in a secular bear market. But that's fine. But you have to be cognizant of what's happening around you if you're holding positions. We have a lot of investors that follow us, and I want to make that clear. And this video is to understand and give you the bigger picture while dialing down intraday and saying, hey, this is what we're looking for today. So I just wanted to kind of make that clear. And I wanted you to be aware that what's happening outside of the United States, what's going to affect our markets here as well. Okay, so we have the markets are at all-time highs. We have now commodity block currency starting to fall. And we also have gold, which now is clinging to the 200-week moving average, which I showed you last couple of days. And if gold starts to break down, I think that's going to be the catalyst for the markets to roll over as well. We also had weakness, right, in our leaders, right? So we have our followers making new highs, all-time highs, but we have our leaders starting to lag. That's not good. We have divergence. So be on your toes for a pullback. Now, I'm not saying we're going to have a market crash at all. I'm not saying that we're going to correct 10, 12%. But we could literally move 60%, 60 points, 4 or 5% lower and still be in an uptrend. So just be aware of that, which I think would be healthy for the markets. Okay. Another thing I want to add, we are in a seasonal time of weakness. So all cards are betting for at least a lower prices to come in the coming days and weeks. So we'll just see. For those of you who are holding positions, please tighten your stops or buy protection. At the very least, I would tighten your stops if you're not looking to buy protection. But it's prudent to do so at these levels. I would not be initiating new longs up here. And quite frankly, since I'm only day trading, the day trades have been very little and minimal because of the fact is nothing is really moving. Either they gap up, gap down, and they go sideways because the sellers can't sell because they're buyers of dips, but the buyers are not aggressive because we are at lofty levels. So you have that halfway mark where nothing's really moving and just the indexes are moving. So that's what's kind of frustrating the last few weeks. And you have to find these little nuggets in between the trading day, and knowing that you have to manage your risk properly, because if you're down on a day, more than likely it's very hard to make that money back as the day goes on because there's no price movement other than the index itself. Okay, so with the market being at its highs, commodity block currency is starting to warn of a deeper pullback. I think that the last phase of this global crisis, which still is intact, right? We're still working out of it. I think that there's one more phase to come down the road, and I don't know when, but I do think that there's going to be a deeper downside correction. And who knows when that could be? Maybe the end of the summer. I'm not sure. Maybe in 2014, that's possible. But again, I'm not a forecaster. That's not what I do. I just see that the markets are definitely not out of the woods yet. And I just wanted to, that's only my view. Nothing tradable. All right, so let's get into the charts. Interesting developments, okay? So we have gold selling off yesterday. We have weaker tech stocks, right, which made the NQ, the NASDAQ, lower, right? And then I think for here, we are now, I think that the markets, are in this inflection point, which I think that, can the markets move higher? Absolutely they can. They've been up 11 out of 13 days in a row. So if the markets can't go higher, think again. That's what the markets are made to do, is to create max pain for market participants, in this case the shorts. So be well aware that the markets can go higher. Much higher? I'm not too sure. My guess is that it hit one of our targets of 1625. Give or take 7 points, I like to put on major pivotal areas. So that would put us in around 1633. Even if, an overshoot of 1635, I don't see the markets going much higher than that, if at all, the rest of the week. Now, we could push higher this morning. We are down nominal in the E-minis, I'd say about 25, one tick basically, 25 cents. So that, to me, is the markets are holding strong in the overnight session despite the rate cut. And actually, gold is up a little bit, not much. So we want to really be cognizant that we could have a gap up and crap. Now, we haven't done that yet, right? We haven't a gap up and started to fail. We haven't done so. We're looking for that for the last couple of days, and that hasn't happened. But it could happen, or the market could just open up where it is now and start to roll over. We'll see. All right, again, price is king. I'm not going through a lot of indicators because we all know how the indicators are showing, extremely overbought. But we want to make sure that some of our key points that I want to make, and that's going to be the NYMO, which is right here. Our NYMO, which is the McClellan Oscillator, very, very reliable. We are now entering overbought territory. Okay, and remember, and I had mentioned when the Dow was, when the S&P was right up in here at 1600. I said, well, we have, and even though we had this big run, I said the markets are still not overboard as far as the NYMO is concerned. Now, other oscillators are our stochastics and our MACD and our RSI. However, they could stay overboard for quite some time. When you have the NYMO here, this is a great indicator to really give you a state of overbought, oversold in the markets. Now, I like to see here is when the markets hits the Bollinger Bands on the outside, that's when you get the market pullback. So we haven't got there yet. So I'd love to see this market really pop up here and really tag this Bollinger Band. It doesn't have to even break outside of it. As long as it tags it like it did here and then start to roll back down again, that would indicate to me that I would put on a market short just to do so, because you're identifying your risk properly, right? If the markets pop up higher, it would be the high of that day. It doesn't have to be today, but it would be the high of that day, and then the markets roll. Now, the markets could roll from here. We're already at resistance right here, right? If you see, we broke through resistance, came back, broke through, came back. Hit resistance, failed. Hit resistance, failed. Hit it, failed. Hit it, failed. Didn't get close to it, but we got close to it, but failed. And again, now we're at it again. So we could just fail right here. So that's why I'm saying the markets are at an inflection point. So please keep an eye on that. All right. I want to show you the VIX. Fear is creeping into the markets, guys. All right. So we have the VIX here actually up 17 cents today. And why? Well, because it's normal that when the markets are at uncharted territories and we are so extreme to the upside, we are one-sided, we have sentiment totally on the bulls, you have to be very careful because there is only one door. And when that time comes that everybody wants to get out, look out below. Now, the fear is starting to creep into the markets. Let me show you the CBOE. Although we close bullish, but if the markets were really here, right, and we should be down here somewhere, 65.70. So fear is definitely creeping into the markets. Show you the tick. Tick is now at these levels where markets do pull back, right? Just wanted to show you some early areas here, right? Here, here. And if you just take a look down and roll your eyes back and forth, you can see what I mean. Now we're back up to these areas here. So tick is also starting to get a little bit extended. Now, let's go to gold. And I want to show you the daily chart of gold. Nice big bear flag. We didn't even make the 38% retracement here. So we're starting right now the process of rolling over again. Now, again, we could actually bounce because we're still on the 200-week moving average in gold. Let me show you. And I have this circle, but we literally tagged it. We're about 6 points away. 1444, 1445 actually is the 200-week moving average on the weekly bar chart. So be careful, because if we break down, look out below, margin calls, this thing's going to get flushed, and I mean flushed in a bad way. So be very, very careful. You have downside targets could be the low here, which actually coincides nicely with this little area here at 1300, and then you also have this area here, which would be somewhere around 1250, okay? And then we would reevaluate it. But watch gold in the coming days, because gold could be a precursor of a market sell-off. So keep an eye on gold. Now let's run into the charts, okay? And we hit our target of 1625. We actually blew through it by 96 cents. Again, we are at the upper end of this confluence area of resistance. We're at the upper end of the Bollinger Band. So use caution. Again, if you're day trading, you want to buy stocks, that's fine, knowing that you're going to be flat at the end of the day. All right? Now, we are at this area. Can we go higher? Sure we can. So I give it 16, even if you got to throw another 10 points up there, but above 1635, you know, I'm definitely interested in shorting more than I'd be looking to buy stocks at this point. Here's the monthly chart. Just want to show you where we are with the monthly. We are very, very early. Obviously, we're only the first week of trading. But now, again, uncharted territories in the spiders. Weekly chart of spiders. Here you go. Now, we're right now, it's only 2 trading days, but right now we have an outside week again in the weekly chart of the spiders. Daily chart, as you can see, we're up, overextended at the outside of the Bollinger Bands here. 8-day moving average is at 159. We are 162.60. And again, revision to the mean. It always happens. It will always revert back at one point. Doesn't have to get exactly there, but will always revert back to the mean before moving higher. And my guess is that this is a logical area that double topped, that failed, and broke higher. So be very careful, guys, here. Very, very careful. And we are at the upper end of this trend line. So right there. So be careful here. Maybe a little bit more movement, and then we move high. But look what's happening here. Low volume. That's what I don't like. Overextended, MACD, stochastic. So, again, a lot of red flags out there. Now, again, remember, the red flags really haven't happened. They just keep ignoring it, and that's fine. But not me. I'm going to just, again, just look for day trades here, intraday. And if I don't get any, fine. You know, if I can get 1 or 2 trades for the day, fine. If I can get paid, I'm not looking to extend myself or put any type of risk out there at these levels. I think it's just showing you that gap up, and then on the 60-minute chart. And here's the 30-minute. And again, we are pinching yet again. So that's telling me caution here. Another move is happening. as we did here. We had that little pinch, boom, we blew out to the top. Now we pinch in again for the next 2 days. We consolidated. So look for a move, a bigger move to come. Again, it doesn't tell you where, but just watch for a bigger move here. IWM's had a decent day, nice follow-through day. Again, we are overextended. Not as much as the Dow, but here's one of our leaders. We did make a nice little movement, play a little catch-up, but big cap tech definitely lagging here. Transports had a nice big push up higher. This is also really good, right? We have transports here, 4 days up, straight up, vertical. Guys, this is just, it's out of control. It's a euphoria of buying stocks. And again, that's fine, but you can't have the markets, go up another 6 or 7 days. You were 11 out of 13 days up. To me, if you were 3 out of 5, it's different, but I mean, this is getting a little out of hand here. And here's the 8 at 109. You're at 114. So, definitely due for a pullback or signs. Again, it does not have to happen. But I am looking for a little bit of a pullback. And if I do get a pullback, then I would look to maybe enter or add any position that you may have. I'm not doing that until we get something meaningful. But again, guys, watch this. We are back above it. Dow Jones did break up a little higher, up 89 points yesterday off the 2 doji bar. But again, overextended here. Back up above 93 in the stochastics on the daily. And Goldman Sachs had a big push up. Nice doji candle. Where does it go from here? Down to doji indecision. So do we roll back over and break back below? Only time will tell, but this is going to be interesting today too as well. I watch Goldman on a regular basis, even if I'm not trading it for the day. But we did break above it. We are holding above the downtrend line, so still bullish here. So just use caution if you're trading Goldman Sachs. Here's the XLF just to show you the banks had a nice 2 or 3 day move higher. And Apple, weekly chart of Apple, obviously we're only 2 days into the week, so Apple no movement, down $1.80, really not much at all. Candle looks worse than it does here, but again, on Apple, we are in this straight vertical channel. I would use caution, look for a pullback back to the upper end of this lower downtrend line in red. That would be a decent buy point, 420, 425 for a trade. Again, Apple to me is only a trade. I think Apple's pretty much dead money if you're looking to hold it. I'd wait for a deeper downside correction. I think you get one more flush out of Apple before the fourth quarter comes. And lastly, weekly. No movement at all. Upper end of the big bearish rising wedge on the weekly Qs. Now the Qs were weaker than all of the sectors. And now you could have a sector rotation coming out of big cap tech. Obviously, not a problem, especially when you have a bull market like this. Money usually tends to move in and out of different sectors, and they rotate. So that is fine, but you got to watch. You have gold here starting to sell off a little bit. Big cap tech starting to sell off. You're at key inflection points. Market at all-time highs. Recipe for a pullback. So, guys, use a little caution. Please tighten your stops if you're holding positions, or definitely buy some protection. It is definitely prudent at these levels. All right, guys, a little long-winded. I apologize, but I really want to get the point out for today. Have a great day. We'll speak to you tomorrow. Take care.